Good afternoon and welcome to the 718th meeting of the Economic Club of New York. I'm Barbara Van Allen, President and CEO of the club. The Economic Club of New York is known as the nation's leading nonpartisan forum for discussions on economic, social, and political issues. And over the past 3 years, through our diversity, equity, and inclusion programming, we've leveraged the club's platform to bring together prominent thought leaders to help us explore and better understand the various dimensions of inequity in underrepresented communities and highlight strategies, best practices, and resources that the business community can use to be a force for change. That continues up through today. We're not doing this work alone, and we want to give a special thanks to our corporate partners, BlackRock, MasterCard, PayPal, S&P Global, Taconic Capital, as well as the many members, speakers, and subject matter experts that are now and will continue to be engaged in this work. I'd like to extend a warm welcome to students from Mercy College, the NYU Stern School of Business, and Georgetown University, who are joining us virtually today, as well as our largest ever class of 2023 fellows, a select group of very diverse, rising, next-gen business thought leaders. I'm really honored to welcome our special guest today, Jesse Van Tol. Jesse is NCRC's president and CEO. He has been with NCRC since 2006 and has held a variety of leadership positions, eventually becoming chief executive in 2018. His work championing fair and responsible banking has resulted in nearly $300 billion in new investment in low and moderate income communities through community benefits agreements with various banking institutions. Through his leadership, NCRC has grown today to an organization with assets of nearly $150 million and an annual budget of $35 million. Jesse is a popular speaker and lecturer, testified before Congress, and appeared on NPR, in the New York Times, Wall Street Journal, Washington Post, Politico, and many other outlets. He also sits on a variety of advisory boards, including the Federal Reserve Board's Consumer Advisory Council and Fannie Mae and Freddie Mac's Consumer Advisory Councils. He's Affordable Housing Advisory Councils, He's a member of the Consumer Advisory Councils of Bank of America, JP Morgan Chase, Truist, Fifth Third, Huntington National Bank, First Horizon, KeyBank, Quicken Loans, Santander, and numerous others. Jesse was also a senior fellow with Humanity in Action, an international human rights group, and a Communications Institute fellow with Opportunity Agenda. Jesse received his bachelor's degree in history and international studies from the University of Wisconsin-Madison and received an executive education certificate from the Harvard Kennedy School as part of NeighborWorks Achieving Excellence. The format today will be a conversation, and we are delighted to have club member and client advisor at Bridgwater Associates, Melody Rollins, doing the honors of moderating. In addition, we'll be using the chat box for this conversation, so you can enter questions directly there for their consideration, time permitting. As a reminder, the conversation today is on the record, and we do have media on the line. Melody, if you're ready, happy to pass the mic over to you.
Perfect. Thank you so much, Barbara, for having me here today. I'm super excited to be in conversation with Jesse Van Tol. And thank you to the Economic Club of New York for putting this on and for the series that you described at the beginning. So, Jesse, I want to dig right into what you do and what's going on now that this community needs to be aware of. So can you first start by describing what is NCRC and what's the core mission of the group?
Sure. So the National Community Reinvestment Coalition is a coalition, first and foremost, of over 700 dues-paying organizations around the country who take as really their common purpose, making a just economy a national priority and a local reality. And the community reinvestment in our name comes out of the Community Reinvestment Act, which was passed in the 70s as part of a really a suite of civil rights laws aimed at addressing redlining, residential segregation, discrimination in the provision of credit, that, in the course of our nation's history resulted in and exacerbated a fairly significant racial wealth divide, resulted in residential segregation. So we do that in a variety of ways, really working with financial institutions to address, opportunity in low and moderate income communities and in communities of color.
Excellent. And we know that some of the legacy of that discriminatory lending persists. And so can you talk about today, what is the NCRC doing and its member organization to combat both that kind of disparity in the access to capital, and then what it ultimately leads to is that racial wealth divide?
Yeah, and I like to start out. I mean, I think a lot of people may or may not understand the size of the problem. So when we talk about the racial wealth divide, the median Black family has something like $8,000 in net household wealth, where the median white family has more like $155,000 in net wealth. So we have, an income gap that has closed, but a wealth gap that has remained really for the past 50 years pretty constant. And so people who are asset poor and people of color tend to be more asset poor than their white counterparts. Start life without much wealth. They therefore tend to be to grow up in communities that have inferior public assets, that are segregated from socioeconomic opportunity. Research shows that your zip code is more predictive of your economic outcomes in life than virtually anything else. And they also receive inferior service from the market. They're still subject to discrimination when engaging in credit transactions for a variety of reasons. And because, they are asset poor, there's a negative feedback loop. Their families tend to be asset poor. Even if they earn a higher income, they have greater financial responsibilities in their family network. And so the cycle sort of starts over. Our mission and our goal is really to try to disrupt that negative feedback loop, to think about the ways in which people start to accumulate household wealth through homeownership, through business entrepreneurship, to work to make sure that when they interact with, whether it's their bank or a fintech or any type of financial service or housing provider, that they don't experience inferior service from the market, that they enter into those transactions free from discrimination, but also importantly to address, the neighborhoods and the communities in which they live, to create neighborhoods of opportunity, to tackle and address residential segregation, to create affordable housing and economic development in those neighborhoods. So a lot of what we do, Barbara mentioned the over 300 billion. I think it's actually much more than that now, over 500 billion that we've done in community benefits agreements with banking institutions. These are commitments to make investments in low and moderate income communities and communities of color, to promote economic development, to create living wage jobs, to invest in affordable housing. So it's both addressing wealth in terms of wealth as an individual asset accumulation through home ownership, through entrepreneurship, through savings, investing, but also to address the fact that wealth building is really a team activity. It's where you grow up. It's what opportunities you have access to. It's not just private assets, but public assets, good schools, good hospitals, access to healthcare. And we really work on addressing all of those things, both directly and through our membership network.
Can you describe, just for those who are less familiar, who are the players, who are the entities that you're working with? Obviously the banks, because of their Community Reinvestment Act requirements, but who are the other community-based players that you might be engaged with?
Yeah, so banks have this unique obligation because they're covered by the Community Reinvestment Act to make affirmative. They have this affirmative obligation to invest in communities. But obviously, we've seen, through the ESG movement, lots of other types of corporations interested in giving back and investing in communities and working on addressing racial equity in a variety of ways. We've seen that post George Floyd. So there are other entities with those kinds of obligations. Hospitals have an obligation to address the social determinants of health. We see unprecedented investments from non-bank institutions investing in CDFIs or minority-owned banks to help improve communities. So really, we work with a variety of institutions. City governments have a real vested interest in making sure. Often public capital is going one way, private capital is going a different way. We view our work as really attempting to align different sources of capital to address the same problems that are impacting lots of different corporations through, the lack of a great workforce available to hire, the lack of the lack of wealth in many communities means that the customer base is just not there. These problems impact a lot of different players. But first and foremost, we're working with community-based organizations, people at the front lines of addressing these problems. So community development corporations and CDFIs, housing groups, developers, entrepreneurship, small business support centers. The groups really at the front lines of working with people who have been impacted in some negative way by this system.
Right. And so how can the business community be a part of this work?
Well, obviously, the banking community is a part of this work through their CRA obligations. I mentioned ESG, DEI. These are the kinds of commitments we see organizations making today, people who are concerned about the nature of this problem. I would encourage people to really think about how they're partnering with community in a different kind of way. Okay. We see lots of corporations making commitments, thinking about whether it's racial equity or the environment, some other type of corporate commitment to addressing those issues. Part of our role is to really work to make sure that those things are grounded in community need, that there's community accountability attached to that kind of business planning, and that there's deep listening that happens. We think the best solutions to those kinds of problems are found in community, and sometimes when we come up with ideas that are divorced from any kind of accountability with community-based organizations, these are the solutions that fall flat. So we really, encourage corporate institutions to engage deeply, to think about ways in which they might address not just individual well-being, but the well-being of places and communities through the investments that they make, through where they hire their workforce from, supplier diversity, and the way in which they partner with community-based organizations. So a variety of ways in which, we think corporations can be engaged and involved in this work in a deeper way. And those are just a few.
Okay, that's helpful. It triggered in me this fear that many of us in the business community have of these kind of falling in the middle of this political divide. We're starting to see more and more conflict and more politicization of things that have been happening for decades and things that have been previously accepted as part of our social fabric. And so some of what you described might be now called woke capitalism. What do you think about that? How does that affect your work and your ability to build these coalitions between public and private entities?
The first time I heard the expression woke capitalism, it was in the context of someone attacking what they believed to be woke capitalism. I think it's notable, at least those of us in the economic justice space. It's not a term that we use. Although I've joked I must be on the secret woke capitalism committee. Maybe I'm the chair of it. Who knows? But it's certainly not something not a framework that we use in our work. I will say, I think, when I hear, but it is indeed, there's this increased politicization around these issues. When I think about the work that we do, even the work in sort of that environmental activists do in an ESG framework, a lot of these things are really about thinking about the self-interest of corporations through a longer term time horizon, which is to say, recognizing that that market behaviors have some negative externalities, sometimes on the very customers that corporations serve, and how do we account for those negative externalities, but also how to promote a longer term view of profitability, that indeed, whether it's climate change, the racial wealth divide, just to give an example, these things have long-term implications for corporations. Just to give one example, net new house formation for the next 20 years, the entire net new household formation in this country is people of color for the next 20 years. The future customers of America, whether it's people buying a home or doing anything else, because of changing demographics, are people of color. And if we don't start to address the racial wealth divide and the problems that impact them, 20, 30, 40, 50 years from now, there won't be a market left for corporations to serve, at least not one that's doing well, that has wealth, that has a measure of economic opportunity that's equal to what people experience today. And the same is true when we think about environmental issues, that if we as a society don't address and get ahead of climate change, the impact of climate change has the potential to destroy markets in a way that's really negative for corporations. So when we think about our work, part of it is recognizing that there may be things that in the short term don't look like profit maximizing for a corporation, but in fact, in the long term are. That if we don't create more opportunity for the people living in this country, that just won't have wealth and really the means and ability to buy products in the future, that our future will be degraded for all of us, that our tax base will erode, and we won't have the opportunity to pay for public goods and services in the same kind of way. So when we think about, what some people call woke capitalism, I also think of, what's the alternative? Is it slept capitalism? Like we should just sleep on these problems and pretend they don't exist and hope they go away on their own. And that doesn't seem like a good strategy. It's certainly not a good business strategy. And I think sophisticated corporations know and understand. That's why I think you see such a move, whether it's towards ESG or DEI, that people understand and recognize that it's in their business interest to address these problems, that their future and indeed current workforce are people of color, that their future and current customers are people of color. And if we don't do something as a society to address these problems, starting now, that the future looks fairly bleak, not just for those groups of people, but for businesses as well. And so you can call it woke, you can call it enlightened, or you can just call it smart business in terms of thinking about profit making in the longer term, and not always just thinking about the quarterly report to the market.
Yeah.
That indeed we have to think in a longer time frame, or the economy will suffer.
Yeah. What are some metrics that businesses or those engaged in this work can hang on to measure their success, measure their impact on communities and on individuals?
Yeah, well, a lot of my work's done in a specific context, but certainly we think about community investments, and community investments in a variety of ways. So is a corporation employing diverse suppliers, and are they contributing to business success of small businesses in a different kind of way through their investments? And some corporations have significant place-based operations. They're in communities alongside people. Are they investing in those communities that create community infrastructure, that create community assets? Whether that's the kinds of investments in affordable housing that banks do, or whether that's in through their philanthropy and creating different types of community assets. And then, how are they partnering to promote, encourage, and create individual wealth and assets? And I think that there's a variety of ways of doing that based on a business model. It will be different for every type of institution, but really to promote both economic resiliency and other types of resiliency. How have they added to the community in ways that do that? And that could be through the greening of their corporate facilities. That could be through ways in which they invest and create assets that exist not just for their company, but also for the community at large. I think, for example, one of our partners is Rocket Loans. Rocket helped make downtown Detroit have some of the fastest internet, I think, on the planet through an investment in fiber optic cables and internet that benefited the company, but also benefited the community because they provided it to a broader community at large. That's an example of a non-bank making the kinds of investments in community infrastructure that, were part of an investment they made in Detroit. That if you look at what's going on in Detroit today, very different from what was happening 10, 20 years. And that's on my mind because I was just in Detroit a few days ago.
Mm-hmm. No, that's very helpful to have some tangible examples, I think, and pretty powerful examples. Also in that corporate context, we talked about being labeled as woke, which I love how you said, would you rather that I'm asleep? Because I'm not sure what it means either. But there's also the recent Supreme Court decision on affirmative action that, of course, directly impacts academic institutions. But there are some potentially collateral consequences in corporate America and in businesses. How do you think that's going to impact the banking industry and broader business community?
Well, look, certainly I think it has sort of cast a pall on people's efforts to think about promoting diversity in an academic context, and perhaps it will have a broader application as some signal of where the Supreme Court is heading. Certainly, I think that's what people worry about. I think a couple of things I would say. In the banking context, not clear that the decision has direct application. Many of the things we work on, exist because of a real separate statutory history that's grounded in historic discrimination, in things that happened that disadvantaged people of color, and really the attempts to address them are an attempts to redress them, to address a historic harm that was caused against a particular community. We think there's a strong constitutional basis for addressing those issues and for the way in which the programs that do so are designed. I think there's also, certainly when we think about economic opportunity, we don't just think about race inequality. We also think about class inequality. And, there's a lot of work and thinking that's been done. And what are the best ways to really think about kind of a form of targeted universalism, by which I mean policies and practices at the corporate level that recognize that, the harm to specific communities may be different and some of the solutions may be different, but also we can think about things that really help to benefit everybody who's been economically disadvantaged. So, you want to think about first generation college students or first generation homebuyers. Those folks may or may not be people of color. They may be disproportionately people of color, but surely we can all agree that if you've not had the opportunity to go to college, if your family hasn't had the opportunity to go to college, that in this country, that's something we want to promote. We want to give people that opportunity, regardless of the color of your skin. And can we think about those things that would be the best possible interventions that have a specific and targeted impact on people who have been discriminated against in this country and who may not have had the opportunities that other people had, but also that is broadly available to anybody who fits that description, who's not had the opportunity to go to college, which, by the way, there's millions of people in this country who are white, who are also asset poor or who are also low income. And we ought to be thinking about solutions to that as well, even if we, those of us who are, in the economic justice field know and understand that the racial wealth divide as a whole is massive and not shrinking. A lot of the historic harms were targeted at people of color. That discrimination continues to exist on the basis of race, whether you're talking about housing or banking. So certainly, a lot of distress about the Supreme Court decision. I think a real sentiment, certainly on my part, that it's set the country back, that it will be and continue to be divisive, but also optimism that we can find ways and solutions to address these problems as best we can. And I think it's really in the self-interest, in the ways I laid out earlier, for institutions to do so. But I do worry that people will use it as an excuse, as a reason, that people will shy away from things that they were doing and saying out loud. And I think we've already begun to see that in some ways. And I hope that is not, the broad view of most people. I hope that people can unite and recognize and understand that because of our history, the problems we're trying to address, whether it's lack of representation in secondary education or whether it's the racial wealth divide, that we do have problems that need to be tackled and solved as best we can.
Yeah, no, it's right. I think of the on-ramps, like you said, to a college education, to buying your first home, but also within a corporate context, it's to that next promotion and the next promotion into leadership positions. And, I worry that some of the DEI initiatives that are intended to bring those folks who got through the first three, gauntlets are now at this point where they still need role models. They still need examples and people who will pull them up. And how this plays out, we all have to see, but there's definitely some trepidation on my behalf and many of my peers about what this could mean down the line for some of those initiatives as well.
Absolutely.
Yeah. And I know we have a lot of some of the college students on the line, including Georgetown, which I'm excited to hear as Hoya alum myself. I want to hear a little bit more about you and maybe make this real to those earlier in their career. You've clearly been very involved, and this is very personal for you to be involved in this work, but how did you make this decision to pursue this as a career, addressing economic injustice, and maybe give us a little bit of story about how that started?
Sure. Well, I grew up in Memphis, Tennessee, which if you ever wanted a life lesson on poverty, on the history of this country, on racism. I recall growing up, my neighbor used to fly the Confederate flag on MLK weekend because in the South, people celebrate Robert E. Lee's birthday
Right.
at around the same time, and so I often would say the Civil War never really ended in parts of the South, and yet also to be the site of the National Civil Rights Museum, of course, where King shot, the rich history of the Civil Rights Movement, which is evident and lives on today in many of those same communities in the South. And I often think about, I grew up relatively poor. There were 7 of us, 5 kids, 2 parents. We lived till I was about 12 in a 2-bedroom rental house. And my mother in her 40s went back to school and became a doctor. And that was transformational for us. I remember when we bought our first house, all of $90,000, and my parents couldn't get a loan because they had no credit history, because they had never been in debt. They paid everything in cash, and had to actually go out and buy something with a credit card and go into debt to establish a credit history to eventually get a loan to buy a house. And really only had that opportunity because of the educational opportunities that my mother had to go back to school and become a doctor, which was transformational for my family. But I've recently reflected on the fact that I grew up 10 minutes from where Tyree Nichols was killed by the Memphis police. And some people get that opportunity and some people don't. So today I live a middle-class existence, and probably very few people when they meet me know that part of my upbringing and where I grew up. But so that's been sort of the career arc for me, recognizing and understanding the central role for many people that things like home ownership and access to the credit system for most people is a primary way in which they end up building wealth, and disparate access to that credit system cuts people off of that opportunity to do so. Both our history in this country of doing that and the ongoing discrimination that happens, and we've documented that in our work. It still happens in mortgage lending. It still happens in small business lending. So that's a small part of what inspired me. I sort of grew up around it. I had parents who were activists in Memphis, and got introduced to actually NCRC at a pretty young age. And when I graduated from college, just decided to move to DC. Didn't have a job. I wanted to work in something in public policy, and ended up landing here. And it's the only job I've ever had. I've been here for 17 years. So
that's amazing.
I don't know if that's great career advice. Very few people, I think, end up in one place for so long. And I was fortunate to have opportunities along the way. But that's a little piece, a little part of why I do what I do.
What do you recommend for the young activists today? How can they get their start? Or where do you think are impactful organizations, or which impactful organizations might they be part of? Which type?
Well, there's so many, and so many great organizations, but I think what would I say? I'll give a piece of advice that maybe is a little different from kind of standard career advice. I've spent my career really understanding that the world operates in terms of self-interest. And I think, if you're a young idealistic person and you think about altruism, maybe there's a temptation that people do things out of the goodness of their heart. I've come to view the world as operating in terms of self-interest, and self-interest is complicated. People want to be viewed by other people in a certain way as moral people, as living up to their values. They want to make money. They want to provide for their families, and really understanding the self-interest of the people around you was something very beneficial, both in analyzing a lot of problems in society and why they don't get solved. Often there's a misalignment of self-interest, at least in the short term, even if there's alignment in the long term. That to me really unlocked kind of how I came to view the world. Through this lens of self-interest. And so I think for a young person, getting the opportunity to be exposed to a lot of different types of organizations, even if I spent my whole career in one place, it was at a place that happened to partner with a lot of different types of institutions, community-based organizations, banks, and got to know and understand a lot of different perspectives, a lot of different people, and what their self-interest was, what motivated them to do what they do. And even though that doesn't make my job easy, certainly understanding how people, how corporations and others engage in the world and why they do what they do comes down to, what their self-interest is. So that's a bit of perhaps unorthodox career advice, but less about a particular institution and more about just a way of viewing the world.
No, I like that. And I will barbell that with any advice you have for the likes of me, late career folks who really believe in economic justice and want to contribute to the work you're doing.
Well, there's all kinds of ways people can contribute. I mean, the first is certainly we need people working at corporations and other institutions who believe in this stuff. And a lot of our work is aimed at empowering those people. It can be a lonely existence when you're working from the inside to steer an institution towards maybe a more equitable vision for the future of that institution. And so just encourage people in that kind of position to stay the course. And we, of course, would love to connect with those kinds of folks. I think those of us in the nonprofit world are always looking for people who have corporate background and experience who want to do good. We just by way of example, we run what's called a CDFI, community development financial institution. It's a kind of nonprofit bank, and we're often hiring and looking for people with corporate finance backgrounds who are willing or able to take a pay cut. The nonprofit world is not the best place to make money, probably, but you can do a lot of good with that kind of skill set. And so those are some of the kinds of ways to partner. Building partnerships, as well. And it's not always about grant making. We've got great partnerships with a variety of different institutions. For example, through our Equitable Development Fellowship, which is sponsored by Morgan Stanley, and which gives postgraduate students an opportunity to do a fellowship with some of our member organizations. We have a partnership with Howard to work with some of their doctoral PhD economics students. We're looking for those kinds of, corporate, academic, and other partnerships. And then I don't know, I don't speak just for NCRC, but for the field. When I say that, I think there's all kinds of ways for institutions and corporations to partner and bring their resources to bear, even outside of a grant making context.
Right.
And maybe there's sometimes fear and concern about engaging because nonprofits are also looking for grants or looking for ways to partner with corporations, support events. But those are just a few of the ways I think people working inside of corporations or other types of institutions can really structure some programs that that helps serve the interest of everyone involved.
Excellent. I know we have probably at the end of time, I'll ask just one question for you to kind of bring all this discussion home for us. How does this work, your work, benefit everybody? How does it benefit society, right? So some folks want to say this is one lane, this is their thing, I'm not into that thing, or I don't care about that thing, or it's too woke for me. But tell us how this work will benefit society overall.
Yeah, I use one example about inclusion in the economy. So former Treasury Secretary Jack Lew was talking about America's future. And he said, America's economy is going to grow at 3-4% every year. And he compared that to Europe. But it was dependent on building a more inclusive economy. It was actually dependent on addressing immigration. And that's one way when we think about the economic opportunity that we're losing because not everybody in this country is included in the economy equally. That's a lack of value creation. And that's a lack of value creation that hampers the economy, that limits its size, it limits the size of its growth. So when we think about creating a more just economy, we're not talking about creating a more limited economy. We're actually talking about creating a more expansive economy, and one that produces more equitable outcomes. And in producing more equitable outcomes, it actually grows the size of the customer base of those corporations engaged in the economy. So I think that's a way that benefits us all. When you have a more thriving economy, more people making money, you have more people able to pay their taxes and contribute as a whole to social goods. And that's, I think, a vision of the future that certainly we all can get behind. And so, when we think about addressing the racial home ownership gap, it's about moving more people into the ownership economy, so they have an opportunity to build that wealth and pass something along to the next generation. So we have this more inclusive economy that also will grow faster and is larger.
I appreciate that. Thank you, Jesse. I enjoyed the conversation.
Thank you, Melody.
Jesse and Melody, that was just terrific. And we learned a lot, just chock full with insights. And thank you both for sharing your time with us today. I wanted to just look ahead for a minute. We're honored to kick off our fall season with a 9/11 signature luncheon featuring a panel including Medal of Honor recipients. And we'll have the chairman of the National Medal of Honor Museum Foundation there. She also happens to be chairman of the NFL Foundation. On September 14th, we're pleased to be hosting Sergio Armati, the group chief executive of UBS. We actually just opened that yesterday, and we already have a lot of people signed up. September 18, we have a webinar with Kent Smetters. He is the Botner professor of business economics and public policy at Wharton. They have a budget model there that I think our members are going to find quite interesting. On September 27th, we have a luncheon with Brian Moynihan, the chair and CEO of Bank of America. I also want to mention that we have a number of very important events that are not yet confirmed that could impact September. So please keep your eye on that calendar. So that, and of course, we'll be in touch with emails as well. And then finally, I want to take a moment to recognize those of our 362 members of the Centennial Society joining us today, as their contributions continue to represent the financial backbone of support for the club and all that we do. So thank you to all who attended today. We hope you enjoy the rest of the summer, and we look forward to seeing everyone in September. Thank you. And again, thank you, Jesse. Thank you, Melody. Great conversation.